Welcome to Overnight Market Brief, pre-market edition by AGI Era. Good morning. Today is Tuesday, March 3rd, 2026, and it is shortly after 8 a.m. Eastern Time. This is your executive summary of global market developments, analyzing the overnight flows in Asia and Europe, the key macro drivers, and the setup for the North American Open. The prior session and macro context. First, a look back at yesterday's close. Wall Street finished on a slightly positive footing. The S&P 500 settled at 6882, up 0.04%, while the Nasdaq 100 gained 0.13% to close at 24,993. Crucially, the session was driven by a modest risk-on sentiment, but the real story right now is in the macro assets, heavily influenced by escalating geopolitical tensions. Right now, the 10-year Treasury Yield is trading at 4.091%, up 1.34%. The U.S. dollar index is up 0.72% at 99.45, while crude oil is up significantly around 75.86, a 6.5% increase. Gold is trading lower at 5230.99, down 1.52%. The surge in crude oil prices and the U.S. dollar index, coupled with rising Treasury yields, is a direct consequence of escalating Middle East conflict, driving a flight to safety into the dollar and pushing energy costs higher, which typically acts as a headwind for equity valuations. Overnight session, Asia and Europe. Moving to the overnight session, global markets have been under significant pressure. In Asia, the picture was unified in its decline. In Tokyo, the Nikkei 225 finished down 3.06%, tracking broader risk-off sentiment and a stronger yen. Meanwhile, in Greater China, the Seng fell 1.12%, while the Shanghai Composite declined 1.43%. The unified weakness across Asian markets was driven by concerns over the Middle East conflict and its potential impact on global growth and trade. In Europe, major indices are trading defensively. The price action suggests caution following higher-than-expected Eurozone inflation data, with CPI up 1.9% annually in February, providing a negative lead-in for U.S. traders. U.S. futures in the open. Turning to the U.S. pre-market, equity futures are sharply lower. S&P 500 futures are trading down 1.31%, while Nasdaq 100 futures are down 1.71%. The relative underperformance of Nasdaq futures suggests investors are rotating out of growth-oriented tech stocks, a move exacerbated by the concurrent rise in the 10-year Treasury yield. The daily catalyst. Looking ahead to the session, investors are focused on three key catalysts. First, the ongoing escalation of the Middle East conflict, which is directly impacting crude oil prices and driving dollar strength. Second, the implications of the higher-than-expected Eurozone inflation data, which could influence global central bank policy expectations. And finally, the latest insights into the U.S. housing supply gap, as highlighted by Realtor.com. The confluence of these events is likely to drive elevated volatility in the morning session. Given the overnight setup in rates in the dollar, the market's path of least resistance appears to be lower, pending any surprises from the data releases. That concludes your overnight market brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.